So blockchain, what it is, what it does, and why you probably don't need one. So that's probably a little more provocative than it needs to be, but let's see what I have in mind here. So first of all, what are we talking about here? We're talking about information management, okay? What type of information? Well, in principle, anything, but usually I don't think about this information as, say, being like knowledge of recipes, for example. What we're fundamentally concerned with, I think, here is information relating to individual action histories. We're talking about a database of individual performance histories that have value. I mean, they are intrinsically, what I did yesterday in terms of, did I take out the trash? Did I give somebody a sandwich in the street or something? That's intrinsically useless information, really, in the sense that I can't eat it, but, and yet it's the stuff that reputations are built on. And in a world where honesty and commitment is lacking, reputation capital is something that's valuable. I mean, individual work histories, do you show up at work on time, on schedule, customer service records, delivering receipt histories, credit histories, that could go on and on. This stuff has value. And indeed, it's used as currency very often, right? I mean, if you see somebody who's contributed in a significant way to society, you'll bend over backwards to get them a coffee or whatever. People use this information as currency. And as such, there's an obvious incentive to counterfeit it. I mean, misrepresent or fabricate your history. So what's wanted here is an honest and immutable database of histories. The object is to eliminate discordant records. They think about how much time is wasted in and out of the court system trying to resolve he said, she said disputes, right? Wouldn't it be nice, even in your own family, if you could just appeal to an immutable ledger of like what exactly it was I said yesterday? All my problems would be solved. The ultimate goal is to promote fair and efficient outcomes. I mean, societies that don't have these mechanisms are not likely to thrive, let alone survive. Okay, so how do we represent history? Well, I'm an economist, as you know, and I've done some, in the game theory and the theory of repeated games. I mean, I kind of think of very, very natural ways to represent history mathematically. If you want to think about, let E denote a set of events. It could be an individual event. Did you deliver a good to that firm on time as stipulated in the contract? Did you make a payment on your mortgage? E at date T could represent a set of actions that people within a community, and that's to be defined, could be this room, just what we did today. And this is information. At each date, we can index it by date T, 1, 2, 3. A complete history, which I denote H here, is just a collection of this information relating what was done at each particular date. So a history is just a bunch of information relating to historical performance, actions, stuff like that. Note that if you take a look at this structure, I look at it, I go, oh, look at that. This history looks like it consists of a time-stamped blocks of information connected in sequence to form a chain of blocks. That's what I see. So in this sense, any database that takes this form can be thought of as a blockchain, if you want to think about it that way. Now, I'm not going to exactly define blockchain completely this way, but I think it's an essential ingredient to the definition that I'm going to I'm going to build up. I mentioned this because, this is nothing new, right? This is just chain information. There's other ways to represent information. Imagine that E represents how much you've deposited or withdrawn from your bank account. So E is positive, means you've made a deposit. E is negative, you've made a withdrawal. Then you sum up all the E's over time, and then H represents your account balance at date T. In that sense, your account balance is the history of your net contributions to your bank account. Or H could just be last period's action. That's the old what have you done for me lately kind of way of tracking history of favors, right? I mean, so there's different ways to do this, but In the blockchain, what we do is we keep track of the entire sequence of past records. Okay. Now, in any database management system, either directly or implicitly or explicitly, this database management system is going to specify parameters that govern the read-write privileges to the database. Absolutely critical. Read privileges. Who gets to read the data? Are we going to manage this like a public library? Open access? You just walk in the library, you take out a book, or are you going to have to get a library card to take the book out? Maybe you can, I don't know, pay a monthly fee, a subscription fee. How is it going to work, this read privilege? Even more important is the write privilege. And basically, this is who gets to write history. The power to write history, that's a very powerful thing, right? We had tyrants who like to rewrite history for political ends. This is part of what we're trying to guard against with an immutable ledger. So it's a very powerful thing to have the ability to write history. Who gets to write history? What do they get to write? And how? What are the protocols in place to govern the manner in which they record the information and keep it safe and secure? Now, I'm not an expert in database management, but it seems to me, I stand to be corrected, I take a look at this and I take a look at the read privilege and I say, I think that standard protocols, before all this blockchain stuff came around, standard protocols like SQL, the structured query language protocols, could, in principle at least, accommodate a wide range of parameters in terms of the read privilege. We can, put restrictions on who can see the ledger. So we see that all the time, right? I can't go to my bank and see what's on their accounts. But on the other hand, there's nothing technological preventing people from making public or granting public access to their database. We're all free to publish our diaries online, whether you'd want to or not. There's nothing technological restricting us from making our databases open access. And I think that an open access database is equivalent to a shared distributed ledger. It's equivalent, because that means that if anybody can see your ledger, it's as if it's just living on a distributed network of computers. And indeed, if you want to replicate it, go ahead and replicate it. Make as many copies as you want. It's just a computer file. Let people copy it and download it. So this notion of a distributed ledger, open access, we already have that. This is not nothing that we have to invent a technology for. It's already possible. What's different here is the write privilege. Standard protocols must heavily restrict the who in the write privilege, so that only trusted historians, if you like, are permitted to write history. That's kind of the idea. And the whole endeavor, the Satoshi white paper, and this related kind of endeavor poses the question: what if we don't trust these delegated historians? I don't trust the banks. I don't trust the central bank. Although I don't know why. It's not like I'm going to steal your money. We can print as much money as we want. Why would we want to steal yours? I don't trust the man. That's what it is. I don't trust the man. Okay, you don't trust the man. Well, what are you going to do about it then? And this is kind of where the innovation comes in. Now, I don't know why you don't want to trust your bank, but suppose you don't. All right, well, let's think about extending, modifying the read and write privileges. I've already talked a little bit about the read privilege. And my response to this I don't trust the man idea is like, first of all, it's not like we trust bankers, really, although I don't keep my money in the bank because I think my banker is an angel. I keep my money in the bank, I think, because I'm pretty confident, I have faith that the long-run franchise value of banking is going to be preserved by that bank and bank manager not absconding with my funds and potentially ruin the reputation of that bank. At least I think that's an important part of it. It might not be the only thing. So, these reputational mechanisms, we already have mechanisms in society to kind of deal with this issue. It's not like we trust the banks, but we have faith in the reputational mechanisms. They don't always work perfectly, of course, Bernie Madoffs and stuff like that. But for the most part, look around. This is pretty amazing standard of living we're enjoying, okay? Oftentimes, the complaint is with respect to a lack of transparency, but like I alluded to before, you have a problem with transparency, open up the ledger. If that's what your issue is, just open it up. It's not like there's nothing technological preventing you from opening the ledger. You might want to think twice about releasing proprietary information, but if you want transparency, you can have it. So just extend the read privilege, communally if you want. And as I mentioned before, I think this would imply a de facto distributed ledger available in real time. Maybe it's a good idea because with a lot of people looking in on these accountants and bank managers who are, managing the books, that this idea that they have this community that's kind of seeing what they're doing in real time, this could add added bite to the reputational mechanism that'll ensure that we can have faith that these record keepers will do the right thing. So my point here is that a shared, replicated permission ledger of chain-blocked information is feasible with current protocols. We don't need blockchain if this is what you want. So this is kind of part of what explains my title. Do you really need blockchain? Well, let's see. Blockchain is only necessary if you do not have faith in the standard reputational mechanisms to discipline the history writers. Okay? And I can't say a priori, I don't think any of us can make a judgment as to whether or not we should have faith. It's a personal matter. Some people have faith in the government or the Fed that it'll manage the money supply responsibly. Some people don't have faith in the Fed to manage the money supply responsibly. Fine. The people who have faith will hold US dollars. The people who don't have faith will hold Bitcoins. I see nothing wrong with that. So we're talking about the right privilege. What is the innovation here? You don't trust the history writers. Okay, that's fine. You can say that, but what's the alternative? And this is the alternative. This is the innovation. What you do is you game the right privilege. You replace the set of trusted historians. You kick them out, say, forget you regular central bankers, and I'm going to replace you with another set of individuals. Delegates could be in the context, it could be different delegates from different companies, different divisions within a company, whatever. Whatever your notion of community is that you want this database management system to govern. In Bitcoin, these delegates are the miners. And anybody can become a miner in Bitcoin if you're willing to bear the expense, the hardware and the electricity cost. So you replace the bankers, with these trusted historians with these delegates. And then you don't trust these delegates, of course, that's the whole point. What you do is you have this set of delegates play some sort of validation or consensus game that's designed such that the unique equilibrium strategy profile chosen by each historian at every date entails, one, no tampering with recorded history, that is to say, immutability, and that secondly, only true blocks of new information are validated and added to the existing stock of history. So we enter into a period, we can confidently assume the ledger is immutable and true, because this is what we assume. Then, because the new block of information has to be validated and attached to the existing stock of truth, we know that the truth will evolve in a secure and immutable way. So, faith in the reputational mechanisms that governs standard accountants, bankers, custodians of knowledge, or whatever, that faith has been replaced by trust in an algorithm or trust in the game. So when you hear people say, I trust the math, I don't trust you central bankers, I trust the math, this is what they mean. What they really mean is that they trust that this game that governs the consensus and validation game has a unique equilibrium strategy profile that implements these two very desirable properties. That's crazy. We know that games generically have multiple equilibria. You know that from game theory. And maybe it's going to work. Crazy things sometimes work. But why would you want to do this? Why would you want to put your faith in game theory? Or even game theorists don't even, that's why there's a whole body of game theory, because we haven't figured out game theory. So that's what's at stake here. So far it's worked pretty well in Bitcoin, but so here's my definition of blockchain, and this is maybe, I felt like I had to work up to this definition. It's very important, I think, in these discussions of, do you or do you not need blockchain, to define it, what it is. And I don't think we should define it in terms of its desired properties. So when people say something like, the blockchain is an immutable ledger, I don't think that's correct to say something like that. You hope the blockchain is immutable. You hope any database might be immutable. What you have to do is define blockchain by the properties that govern its database management system, and then afterwards assess whether or not the properties of this database management system have properties like immutability. That's something you assess afterwards. You don't define immutability as being the blockchain. That's kind of like political scientists defining socialism as kind of a very desirable way to manage economies, right? Kind of say, look at this socialist economy. And then it fails, and then, you go, well, I guess it wasn't really a socialist economy. I mean, right? So you can't define blockchain as an immutable ledger. Blockchain is how I define it here. It's a chain block information structure with kind of variable read-write privileges, but the key part is that the write privilege is gamed. It's determined by a non-cooperative consensus game at each state t. And that write privilege replaces the standard delegated, trusted historian role. That's a blockchain. What are its properties? That's a good question. Blockchain histories are not intrinsically true and immutable. It depends on the properties of the consensus game. It could be that they turn out to be intrinsically true and immutable, but you don't take that as a given. Because blockchain relies on non-cooperative consensus, I think it's intrinsically more costly than cooperative trust-based counterparts. It just has to be. I mean, getting consensus has to be intrinsically more expensive than just delegating responsibility to a trusted record keeper. If you have trust, you just can't beat it in terms of efficiency. Having said that, depending on the circumstances and application, it may be a cost worth bearing. So for example, like I said, there are people out there that just don't trust the Federal Reserve to manage the money supply responsibly. It's very cheap to manage the money supply responsibly, by the way. It's, one person can do it. But if you don't trust, say, the central bank to do that, then you may be willing to bear the extra cost, the electricity cost, the cost that's needed to secure the blockchain. You might be willing to bear that cost, and that's fine. But I think it's intrinsically more or less efficient. A consensus, especially in a large community of heterogeneous ages, has to be intrinsically more expensive and time-consuming. We'll see. Perhaps Ed will push it back a little bit on that. Okay. I was told to say a little bit about Bitcoin and stuff. We've all heard about, back 4 or 5 years ago, I started talking and giving lectures on Bitcoin. Back then, nobody knew what it was. Now, basically, everybody, in that commercial, sort of. I did buy some because I thought that, and actually, my very first talk, I was giving public lectures on Bitcoin. My first one was at the Fed in 2014, and I realized I didn't have any. And so I went out to my Twitter account and I tweeted out, I said, would somebody mind sending me some Bitcoin? I promise I'll send it right back. And my Twitter feed blew up, right? Senior Fed official caught in biggest scam ever. I got about $10 of Bitcoin, which now would have been worth thousands of dollars, from someone in the Cayman Islands. I sent it back. Bitcoin, it's a money and payment system. The database contains accounts, account balances, account transfer histories. There's no IDs, no info on objects exchange. The read privilege is open and free. The write privilege is open. That means it has to be made intentionally costly. You cannot have, for most applications, a free write privilege. Otherwise, your history books are going to tend to be filled with gibberish. This is what I mean. This is intrinsically more expensive than just trusting a historian. You have to purposely make writing history costly to avoid the DDoS, right, the spam and stuff like that. The write privilege is determined by the winner of a proof of work competition. You know, historians are compensated by an inflation tax, and so newly printed money is used in part to finance the miners, in part they charge fees, we know that. So it's basically a protocol, which also determines the monetary policy of the system. It's governed by an observable constitutional code. It's just a C++ code, open source. It's subject to amendments, code patches, and also constitutional crises, as we've witnessed, hard forks, right? In other words, it's just normal politics, money, and banking, just cypherpunks doing it now. What about this? What's going on now with this cryptocurrency mania? I think these are all likely failures as payment systems, because like I said, you just can't beat PayPal. Or something like PayPal. Now, I want to be very clear. You know, the technology of standard banking system is very efficient. Now, there might be oligopolistic kind of forces that make them charge high user fees and get monopoly profits. The solution to that is to enhance bank competition and get those fees down to cost. The solution is not to come up with an intrinsically more costly way to send money, like a proof of work based cryptocurrency. Would be my. So, you know, I think PayPal, how can you beat it? So, having said that, you know, I can kind of see use cases, especially in international remittances, you know, given the current structure of correspondent banking around the world. But, you know, keep in mind that this space is evolving very, very rapidly. And I foresee standard money service businesses kind of, you know, up in the game. And they're not going to let these cryptocurrencies compete them away, I don't think. What's happening right now with the price? The prices are going crazy, as you know. The price appears to be driven, in my view, by a demand for safe assets. So what do I mean by safe assets? I have a blog post, so if you want to go check it out, I actually have a blog post a couple of years ago. Is Bitcoin the next risk safe asset? By safe, I don't mean risk-free, obviously. I mean more like a flight to safety sort of asset. These crypto assets are safe from government manipulation. Maybe that's the way to think about it, okay? So if you kind of worry about, you know, institutional structures crumbling around the world, you might fly to this cryptocurrency or keep a part of your wealth stored there. This, of course, can generate wild gyrations in the price, making it risky, but this is what I mean by safe. You know, people say the supply side is kind of fixed. Take a look at Bitcoin. The supply is capped at 21 million units. Yeah, I go, well, yeah, sure, until it forks, and then you have 42 million units. You know, we kind of have, well, they're not quite the same, are they? Bitcoin Cash, and it's kind of like the Canadian dollar and the US dollar. What's the difference? There's twice as much of them. I mean, and you know, the supply, even though the supply of Bitcoin is capped, I mean, the supply along the extensive margin is potentially infinite. Anybody can come in with a cryptocurrency. The supply is potentially infinite. So, I don't know. What are some important competitors to Bitcoin? Litecoin, right, offers faster payment process. Apparently, Ethereum, of course, Vitalik is developing this to implement his vision of smart contracts. You know, you get these variations, Zcash, Monero, enhanced, you know, Ripple. Ripple I don't even count as a cryptocurrency. I mean, Ripple is kind of a very interesting case because it built its consensus mechanism as more cooperative in nature, which kind of doesn't go with the. It's often criticized by Bitcoiners and stuff for not, you know, being with the program. So Ripple is kind of recognized. Yeah, you know, this proof of work stuff. It's like horribly inexpensive. I mean, why don't we just trust these nodes to do the bookkeeping for us? That's a lot cheaper. Yeah, it is. Yeah. Let me conclude with this slide. What is the comparative advantage of blockchain the way I've defined it? And for my view is that the comparative advantage of blockchain is empowering what's called these decentralized autonomous organizations, these DAOs. DAOs possess no central authority, no central node. Like, who owns and operates the Bitcoin company, for example? There's nobody. And so these DAOs can offer protocols that are unencumbered by prevailing laws and regulations. So Bitcoin, for example, is a money services business outside the reach of the government. There's no amount of government regulation that can shut down Bitcoin short of shutting down the internet. We can pass laws restricting exchanges and stuff like that, but enforcing them is a different matter. Of course, the same is not true with Bitcoin intermediaries. They are subject to the law. There are central nodes at Coinbase, so we can shut those down. But not these decentralized autonomous organizations. I don't know. Comparative technical advantage. I heard one guy at a convention I was at, he's going, yeah, it's great, because he goes, now what you can do is robots can because robots, self-driving cars or little drones and stuff like that, these self-owned robots can now open up, they don't have, I guess, is it against the law for a robot to open up a bank account? Robots can have Bitcoin accounts. They can accept payment in Bitcoins. These self-owned robots, they can bypass the problems of opening up standard banks and dealing with standard or conventional payments systems. To me, the comparative technical advantages are the anonymity they potentially deliver and the permissionless access and use. That's it, permissionless access and use. And that's really what's driving this, the anarchist side. They want to bypass, forget the Fed. They don't want permission. They don't want to have to go to a bank and present identification. You want all my personal information, to open up. Forget you. I just download a wallet and I work off of this distributed ledger. Potentially in the realm of smart contracts, you get the potential for irreversible actions and transactions. So perfect commitment to contracts that specify debit and credits of virtual cash. Something that, once you sign and agree to it, you agree to it, it's going to execute automatically. There's no way you can go back on it. It's not clear to me what the value of these comparative technological advantages are to registered businesses. For registered businesses, if you want to employ smart contracts, your smart contracts are going to have to be compliant with the legal system that you're operating with. And the attraction here is, for a lot of people, is it permits you to go outside the legal system. So that's kind of all I have to say. I think if you want, I can send you, I think my slides will be made available, and you can link up to my little blog post there. I have some writings on the subject if you'd like to learn more about my thoughts. Thank you.